What's going on, lovely people? Welcome back to the channel. If you're new here, my name is Leo, and in this video today, folks, we are listing off 10 must-watch companies for 2022. Going into 2023, these are some undervalued gems or some gems that are close to being undervalued. They just need a little push. But these are companies that I've done tons of research on, and if you want to watch the in-depth analysis of every company that I list here today, it'll be found in the description box below, as well as a card should appear up here before I talk about that said company. So without further ado, let's jump into company number one, and that is Meta. Now, Meta is a behemoth of a social media platform. You know who they are. They own Facebook, they own WhatsApp, they own Instagram, and most recently, the metaverse development. So here's the thing with Meta. Meta has been grossly mispriced from February up until now. So from February, the price was around $330 or so. Currently, it's around the $130 range right now. That happened because they missed earnings. Anything underneath $200 is a steal for this company. Here's the thing, folks. This is a very cash flow rich company, low debt company, and these are the kind of businesses that we're trying to buy for a long-term investment plan. So this is why I like Meta, and currently it's an undervalued gem. Company number two, and that would be Intel. Now, Intel is a company I talk about a lot on my channel, and simply because of this simple reason. Intel is an undervalued gem. Now, a lot of people might disagree with me and call it a value trap. I don't think so. I just think it's not being looked at in the ways that people see the potential for this company to grow in the future. The market's been absolutely phenomenal for a lot of different businesses, but it's caused a lot of overvaluations. Intel's kind of just been slowly chugging along, trying to find itself now underneath the guise of Pat Gelsinger leading this huge ship. They've been reinvesting into themselves, building foundries and stuff like that. But as we approach this recession, and these are what I'm trying to find here, folks, are recession-proof stocks. This company here has so much cash on hand that it's just sprouting up factories everywhere, and they have low debt. This is a company that's going to be able to weather storms going forward. I don't know if I can say that about the likes of Taiwan Semiconductor Company as well as AMD, but with the sheer cash that this company has on hand, I have a lot of confidence in them over the next 10 years in terms of reforming themselves and surviving any economic turmoils. So this is a company that I'm holding on to personally long term, and it's something you might want to consider as well. Next on the list is Micron, ticker symbol MU. This company is held close to the heart of Mohnish Pabrai. He's a legendary value investor, and for good reason. They're a cash flow rich company, and from their 52-week highs, they've dipped down a lot. $90 from the 52-week highs, now currently down to about, let's say, $55 a share, give or take. This is a company that's trading at a bargain. Now, Mohnish Pabrai, not saying you should follow what legendary investors do, but they are a good starting point to try to see, okay, what are they looking at and what are the reasons why they're looking at these companies. There's a huge chip shortage everywhere. Micron makes RAM chips and stuff like that. There's a hand-in-hand business, and Micron is pretty much leading the charge on all of that space there. So they're a company you don't want to miss out on. Now, for this next company, it's not so much undervalued, but it is almost in that territory, and that's Nvidia. Now, Nvidia, I've analyzed this company a bunch, and the only thing I have a problem with is the current price of this company, because overall, it's a solid business. They make phenomenal products. The only thing I have to say about that is literally the price needs to come down for it to be an investment for myself. But you have growing revenue, growing net income, growing free cash flow. These are all highlights that I like to look at. However, it's currently a little bit too high for my liking from a value perspective. But as we see esports and gaming become more mainstream, you're going to see a lot more involvement with them. And especially now as the gaming industry, as I said, is a growing facet of entertainment. I see them going forward and making more of a mark than they already have. There's no other competitors that do what they do, right? So keep an eye on that company. And just to tie it all up with the semiconductor space, here's the next company, and that's AMD. Now, AMD has been a phenomenal player in this market over the last 5 years. They've really turned themselves around with the guidance of Lisa Su. Now, their free cash flow has been growing up. They're not in the negatives anymore, and they're really giving Intel a run for their money. The only problem with AMD, like Nvidia, is their evaluation. They're priced way too high, but the prices has been coming down. It's going out of that speculation territory to now a more fair evaluation. Now with AMD, I think they make a phenomenal product, and arguably probably better than Intel, to be honest with you, because they're really just trying to take that market share away from them. So this is a company I would like to own, and I'm just waiting for that price to just come down a little bit more. You can watch my detailed analysis of what I think that price should be at, but I'm a huge fan of this business. I just need the price to come down. But that's something to definitely put on a watch list, that's for sure. Next company on the list is Adobe, ticker symbol ADBE. Now, listen, every creator, for the most part, runs some sort of Adobe software, whether that's Photoshop, After Effects, Premiere. They have it all covered. Their software is phenomenal and pretty much industry standard. You can't go wrong with one of their products, and for good reason. It's high quality. And with their business model, it has high profit margin, as well as they've been having steady revenue growth as well. The only thing I can complain about this company is their high PE ratio, if it's completely justified. But at the current metrics right now, it's priced a little bit above 300. I'm hoping that this price comes down below 300, and that's something I would definitely want to take a look into to add to my portfolio. But overall, I believe that Adobe is a phenomenal pick if going forward into 2023. Look, guys, I'm banking a lot on a recession to happen, because that's going to drive a lot of these high price companies downwards, and especially companies that have, let's say, low debt levels and can weather the storm. These are the companies I want to have in my portfolio, and Adobe is one of them. Next company is Ford, ticker symbol F. And honestly, I never thought I'd be talking about Ford, but this company's making a lot of strides in the EV space. They're really taking the fight to Tesla, obviously along with GM as well, but they're really trying to convert, obviously, their current, I guess, demographic from loving their gas-powered vehicles to hybrid and now EV, with the introduction, obviously, of the Ford Lightning, F-150 Lightning, and the Mustang Mach-E. Now, what I like about Ford is that they have pretty decent free cash flow. The only thing that's really bothers me is that they have a decrease in revenue and high debt levels. Now, those are only a little bit of red flags, but currently, from a stock price perspective and the numbers that I ran on this business, if you factor in negative revenue growth over the next 10 years, as well as just stagnant revenue growth over the next 10 years, the company is currently trading at fair value if the stock price is around $10 to $12, which it currently is pretty much bouncing between. So you can buy this company and pretty much hold it for long term, assuming that if the revenue just stays the same or even goes down, you're still getting value for this company. There's still value there. However, I do think as once they have solidified their platform, getting into this company right now, you'll probably be really early, because I think they'll be able to make a solid product that can, let's say, nip at the heels of Tesla and essentially, own some more market share of this EV space, because I think that's something that we really need to see in terms of the auto manufacturing industry, is more competitors in the EV space. It can't just be Tesla and 3 Volkswagen vehicles or whatever. Obviously, their debt levels are something to also keep in the back of your mind. So if you have patience with their debt levels and then paying off their debt with the free cash flow, this could definitely be a strong long-term hold. The next stock on this list is Alibaba, BABA. This company's been under a lot of drama in the last 52 weeks, but here's the thing, folks, whether you like this company or not, it's a heavy cash flow positive business. And now here's the thing, folks, can you trust the numbers that are coming out of China? This has come up in a lot of my videos, and what I always say is it's in China's best interest to be as transparent as possible, to keep foreign investors interested in investing into China. If these numbers turn out to be a scam, who's going to trust Chinese businesses in the future? Possibly nobody, and they're going to close doors to the foreign market, crushing their own economy. It doesn't make sense to me. So what makes sense to me is them actually being honest and transparent. So with that being said, folks, you're currently getting a company at $60 a share that is lower than their IPO price, with free cash flow numbers rather way higher than they were at IPO levels. Just keep that in mind, folks. There's a balance and correlation that exists between the value of the company and their stock price, and right now, as low as this company's stock price is, the value you're getting is phenomenal. The next stock on this list is Oxy, ticker symbol OXY. Now, Warren Buffett has been picking up shares of this business, and for good reason. From a cash flow perspective, they've been crushing the game, they have solid revenue growth, and upon me running my own personal analysis on it and the numbers, it's undervalued from what it's currently trading at. Now, the price has steadily been creeping up, and I believe people are catching wind of this stock. They've realized Warren Buffett's going in on the stock a lot. So obviously, what do people do? Well, they look to top investors and they say, well, if the top investor in the world is buying shares of this company, perhaps I should too. Now, I haven't bought any shares of this business because, frankly, I got to do more research on it. But from what I have seen and what has been appearing to pique my interest is what I just mentioned. Free cash flow, revenue, and currently being undervalued from a numerics perspective based off of those metrics alone. So this is something I'm taking a look at. Maybe you want to add it to your watch list too for 2023. So folks, the last company we're taking a look at, and honestly might be a surprise to you, but it's Google. Google, obviously no stranger to anybody here, but it has obviously solid balance sheets, phenomenal free cash flow, low debt. This is probably my go-to recession-proof pick as we go into this uncertain territory of wherever this market might take us. Now, the reason I put Google up here is because their price has been going down. It's been on a little bit of a decline over the last little while, over the last year, and it's been hovering around this $100 range. That gets me excited, folks, because overall, the fundamentals of this business is strong, and as I said, we want to find companies that can weather recessions going forward, and this is one of them. Now, obviously, they've been under fire because advertising concerns, because the recession's around the corner, so they're not bringing in as much revenue as predicted. Look, guys, the market's been phenomenal over the last 6 years or so. Right? So everything that was great is obviously going to slow down a little bit. What you have to do, folks, is find companies that are able to weather storms, and this is obviously my top choice for a good reason. You're watching this on a YouTube platform right now. If not, what up? But they obviously are the top dog when it comes down to search engines, from Google to YouTube, and now obviously with their phones, like Pixel and other platforms that they're coming out with. This is a company that knows how to reach different audiences, reach out to many people, and obviously from Google Chrome and all their other software that they offer from their Google Suite, there's literally so much that Google has. That advertising is obviously their biggest form of revenue, but they have so many other facets that I think whenever the recession does hit, they'll be totally fine. If this price tag of $100 a share can just go just a little bit below that, I'll be definitely picking up this company, because I think right now at $100, it's pretty much a solid buy. But I'm waiting for more bad news to come out and more people to be scared to sell off this stock. There you have it, folks. Those are 10 phenomenal stocks that you should add to your watch list. Now, write down in the comment section below if you felt like I missed a company or a company I should definitely take a look at, because I would love to analyze it and love to hear your feedback on it. But yeah, if you want to watch a detailed analysis of any of these companies that I've listed here today, in the description box below, or if you missed the cards, obviously rewind and check them out up top here. Anyways, folks, that's the video. Thank you so much for watching. I hope you like and subscribe if you found this content informative. Share it with a friend, share it with your mom, your dad, your cousin, your brother. Anyways, folks, I will see you in the next video. Until next time.